Hi, welcome to Market Alert for Tuesday, the 24th of March 2019. So, gold surges most since 2009 after Fed unveils Q eternity stocks and bonds yields tumble. So, what was it they unveiled? Just take a look at this. Unprecedented intervention, the Fed will purchase 125 billion in securities every day. The Fed are buying everything to try and keep this alive now. Credit card debt, student loans, etc., etc., etc. It's just staggering. Plus, they've got the 700 billion with 200 in mortgage-backed securities. Wow! I mean, you can't make this stuff up now. I mean, this is if they did actually physically print this stuff, there would be smoke coming out of the printing presses. This is just something else that we're seeing now. But then it's no surprise, is it? If you followed the Market Alert for the last 10 years, this is precisely how it ends. The thing is, it's quite amazing when you actually see it start to unravel this way. It is something else. So, what was the market's reaction to this yesterday? Let's have a look. This news was out before the market opened, and we see it here. We had a massive move to the upside. Just get an idea of how big this was. It's just from the low. It was 1,400 points on that news. And then before we know it, so we didn't even get a 76% retracement. We got the market stopping at the DP level and then straight down. Bit of a bounce on the open and then back down. So you can see that the market soon discounted it. And the reason being is that they don't think it's a good idea. They may do, but the problem is people are trying to get out of their positions, and that's why you see the market rally first thing in the morning in the futures market. They bring the market back up, as you're seeing here. This is the new pattern. Bring the market up several hundreds of points in the morning, and then when the cash market opens, the values of the shares are higher, but of course every time you see them selling into it, as you do here. Get a bit of a rally, and then either the banks or whoever comes in and says, I'm out of here, I'm taking what is mine. And that's why you're seeing this. I've got a bit of a bounce going on here. And like I say, we are due for a bit of a dead cat before we then continue lower. Maybe it's going to be the stimulus package. I mean, that's another joke. We'll come back to that in just a moment. The 1.8 trillion has now turned into 2 trillion, I think, with the counter proposal by the Democrats. But like I said, we'll come back to that in a moment. So the market showing a bit of support here at the moment, but for how long, who knows? We only have to look at the weekly charts to see that this is not looking good, and then we go to the monthly chart and we see how bad this could possibly get with the markets coming back to where they started in 2008. And if you don't think that's possible, then you need to go back and look at some other market alerts where I discussed when we had the mortgage and the other boom there from 2003 coming back to where it started, then the tiger economies as well. So it can come back. There's no doubts about that one. Just take a moment or two. But as we go forward, there is absolutely no way. If anybody thinks after the a couple of months or 3 months or 4 months of the virus, I think everything's going to return to normal when everybody's out of lockdown and go out spending, you've got to be joking. The financial implications of this and the deaths will be more from the financial side than they will from the virus, as people struggle to pay, financial pressures, stress, which results generally, and I hate to say it, in people taking their own lives, and the poverty, the homelessness that will result purely from the recklessness of the Federal Reserve and all central bankers, for that matter, over the last 10 years. Just awful to even contemplate. But from a market perspective, yeah, there's no problem in coming back down to the 6,000 level there. So let's have a look at the implied volatility. This dropping off a bit. You can see there 61.63 because the market's got a bit of support. It has to pull back. It can't just keep going up on the implied volatility. There has to be a bit of a pullback. The froth has to come out before you get the next leg down and the volatility moves back to the upside. And there's a visual. Actually, because of the speed with which this has moved, we're actually getting close to the 20 bar moving average there to get towards amber, which we'll see whether we do or not. The yields remain normal. I'll just move that down a bit so you can see it. 116 is the high. Yesterday 0.74. So let's just have a look at the stimulus package as well before we finish. So here we go. Stimulus talks are stalled after House Democrats unveiled 2.5 trillion counter proposal. I mean, where do you start? My sense is we're not making a whole lot of progress today. We're back tomorrow. Well, the proposal was to print 1.8 trillion by the Republicans, and now the Democrats have come in and they want all sorts of climate conditions tied into this, and they want every unemployment person to receive $600 per week. So that's why the bill's gone up to 2.5 trillion. Actually, I thought it was 2 trillion. So again, the insanity of these people never ceases to amaze me. And what's even more worrying is the fact that they are elected. But there you go. You can't fix stupid, can you? You can't argue against stupid. This is the way the world is now. I just thought I'd leave that one with you. Let's see how this one pans out. But as if the Fed haven't got enough problems with everything else that we've spoken about already, that they're actually buying. We're now seeing them trying to get 2.5 trillion or 1.8 trillion for the Republicans, and the counter proposal of 2.5 trillion. Let's just print another 700 billion on top of the 700 billion that we're printing every month, plus the 125 billion per day, plus the 60 billion a month we're printing in T-bills. Oh, and of course we're making available 1.5 trillion overnight to keep the banking system intact as well. So on that happy thought, I will conclude, and let's see what today brings in this unraveling of the global financial banking system and the whole system as things start to get very, very interesting. So with that, thanks for watching. See you in the next one.